Let's move on to the next session of the day. The topic, navigating volatility with long-short AIFs, a new era of dynamic investing. In this segment, you're going to talk about the long-short AIFs redefining their resilience in volatile markets, leveraging the dynamic strategies to adapt and thrive. So please join me in welcoming Mr. Achin Goel, Fund Manager at Bonanza.
Hi. Good morning, everyone, and a very warm welcome to all of you. Thank you, George, for that insightful presentation, taking us back in time, fundamentals, importance of it, the different market cycles we have visited. And investments are integral part of our survival today. हम बोलते हैं रोटी कपड़ा मकान, मुझे लगता है एक 4 dimension ऐड कर दे दीजिए हैं निवेश investments. And truly so, I think from the time we get up from the bed and till the time we sleep, मोबाइल हमारे हाथ में रहता है और आप में से शायद कुछ लोग अभी भी मार्केट ट्रैक कर रहे होंगे, ऊपर है नीचे है, एंड दैट्स आवर लाइफ इज राइट. Financial ecosystem, everyone sitting in this room, we all play a very critical part. And as a manufacturer, it's our responsibility to make sure we continuously work on innovating new products. See, what markets were 10 years ago, they are not today. The dynamics have changed. The participation has changed. So what was working today was not working what was 10 years ago. And that's where it's very critical that we understand the dynamics of the market, the changes in the market, and we develop a robust product which can survive the volatile environment that we are seeing right now. Abhi George said a lot of wealth will be created next decade. Huge wealth is expected to be created, and completely agree with him. Question is, what was working yesterday, will it work for the next decade? Will the same thought process create wealth? And which brings to my today's session, next decade of successful investors will have to think differently. And the design has to be focused, the process has to be focused. And what I'm going to bring you is that exactly design that we have worked with for more than 20 years of experience and crafted earlier for our proprietary trading and then now to the investors in the form of AIF. But before I move ahead, let's take a pause and see how the macros or the events have unfolded in the past.
China has identified the cause of the mysterious new virus,
coronavirus.
The government has been shut down.
The government shutdown cost billions.
Decent time to buy.
There's a lot of FOMO in the market right now.
This FOMO, the fear of missing out.
The stock market experienced a significant downturn.
Markets crashed over 700 points today.
Stock markets have crashed.
So we all know that fear and greed commands our mindset today, and we are controlled by them, right? So now let's look at certain events, and it was again covered in the presentation. You're talking about the fall of 2008, right, with a 59% fall, and followed by 3 years of consolidation. Now we were at minus 1.4% from 11 to 14. It tested patience, right? Then again fall from March 15 to Feb 16, nearly 1 year, 23%. COVID fall. Now this is month on month, but actual fall that happened was close to 59 to 60%, right? If you consider top and bottom. And current economic scenario, which is again worrisome for all of us, right? Market mein paisa nahi ban raha hai, almost a year. We are all worried what is happening in the market. But that has been the nature of market since long time. What is it that is not working for us? It's probably the style of working. It's probably the thought process. And that's where, alternates comes into picture. I think the video that we saw, markets are changing faster than people react. T factor, Trump factor. We all see, the minute news come, we are very hyper to react. And unfortunately, we are hyper to react on the negative side, not on the positive side. So whenever anything comes, fear kicks in very fast. And certain behavior, which also in the earlier presentation we spoke about, there are a lot of biases. And so the herd mentality, overconfidence, recency, anchoring, loss aversion, right? So a lot of biases are there with us. And they make us take wrong decisions, right? When we are in fear, we actually end up making wrong choices. Now let's look traditionally how the long-only strategies work. So again, these are some of the shortcomings and the gaps that probably alternates try to bridge in. Nowhere it means that any product is perfect. But we all know that market cycles have compressed. Regime shift more frequently, the faster than we anticipate. Suddenly you will find the market is in consolidation. By the time you prepare that you have to move to other asset class, suddenly the breakouts will happen and we are in either uptrend or downtrend. Then can you capitalize on the short side opportunities? Now this is a very critical part which probably a long only investments does not cater to. Markets fall very sharp and the corrections are to the tune of 60-70%. But in the rise, you will rarely see that case. Too fast, too soon as an index, right? And can you create alpha in the range bound market? We all know 2011-14, we all know the current what is happening. Higher drawdowns. And this is the asymmetric recovery problem that we all know. That, if any portfolio corrects by 50%, you need 100% growth. Now, that's not easy. 50% fall, it happens. We have seen in the past. Growth 100% happening, too fast, too soon, it's not possible. It takes maybe 2 years, 3 years sometimes to recover this, right? How the industry has evolved. Now, if you go to earlier 2000s, you had this buy and hold strategy and, primarily growth and value investment style. We have also, again, heard, and even today as Bonanza PMS, we have strategy as Bonanza growth and Bonanza value, right? That was the thought process. Then some diversification, came in between. We had thematics, ETFs, multi-asset, factor investing. Then we moved to actively manage long only. Now today, momentum strategies are there, sector rotation funds, quant-based, special opportunities. And now thanks to AIF CAT 3, today you get a mix of opportunities, right? You can generate returns across all market cycles. Now whether bear phase, bull phase, market neutral, you can do that. Whether you actually do that or not, we will see. But there's a possibility that you can do. Pooled investments, 2x exposure. Another beauty of this AIF category specifically is that if you invest 10 crores, there's an exposure of 10 crore available to make derivatives. Now, how you play with that? And I always say, derivatives are like that tools. आप उससे दिया भी जला सकते हैं और आग भी लगा सकते हैं. And many people have that mindset. Derivatives are risky, right? Let me tell you, if you use those tools properly, it is the best creation, in the investment market that can actually bring calm in the environment we are in, right? Broader investment universe. You can invest into unlisted SMEs, right? And downside opportunity. So that is the long-short AIF that we have benefit about. Just again quoting from the PMS Bazaar data, in October 24, long-short AIF fell by merely 2%, right? Followed by AIF long only, which corrected by more than 3%, and index falling by more than -6 to -10%. This is a realization that because of the long-short combination, because of the derivatives that you use, because of the hedging that you can incorporate, the fall will be less. Will it be less every time? Probably no. But if you're doing it right, 80% of the times you will be able to, beat the market in definitely, in that volatile terms. If you want to be successful as an investor, you want to create wealth, you really need to think about that alternate as a structure which will complement your long-only investments. When the markets are up, your mutual funds, your PMS, your unlisted, everything will go up. But when markets are down, you need something to balance, right? You need something to bring that peace in mind. And that's where, AIF CAT 3 comes into picture. Now, the benefits. First benefit is long-only capital appreciation. Now, I have an added advantage. Apart from the listed market, your SMEs, your, IPOs, your unlisted market you can capture. Short side opportunities you can capture. You can create some strategies. And definitely, you work around with the derivatives. And I always call it a twin portfolio, right? To win. Where the main portfolio is long only. Like I mentioned, you can also keep into fixed income, the benefit of this part. Now, every investment manufacturer, the product manufacturer has a different concept of AIF CAT 3. Now, this is again, I'm saying specific to Bonanza that I'm talking about. I like that 20 years of experience is, what has shaped this product for us. And this is the beauty of it. Now, our long-short strength emanates primarily from this part, wherein we use one part to hedge right? And minimum hedging that we do is 30%. That means at any point of time, my portfolio is hedged 30%. It's a dynamic hedging, which can go up to 60, 70, 80% depending on the movement of the market and the parameters which indicate if it's risky. Range-bound market strategies. Like I said, if markets are not performing, what do? Do you continue to sit on the, no returns, or you create some opportunities? And the quant algorithmic strategies, which augment your returns. Now, imagine a long-only portfolio of, let's say 10 CR, and plus you have futures which are also long of 5 CR when the market is trending. Now, that generates a alpha, and significant alpha. Like I said, hedging strategies are used. Primarily we work with index because the quantum of trades required, you normally don't get in stocks, right? So you have to move to index. So mostly we use index, which is index options to hedge our portfolio. And to minimize the cost, again, there are strategies. Range-bound markets, you use covered call, you use pair strategies. Now, again, it's an open secret. It's nothing that, it's my recipe. How you play comes from the experience, right? And then the alpha generating quant strategy. Now, this is the backbone which creates the alpha apart from long only. Now, I'll take you through, a journey of our long only strategy returns. Now, Bonanza has been doing PMS for more than 2 decades now. I'm just presenting return of the strategy of long only. This is again a large cap and mid cap strategy that we have. And you will see, the variability in returns. But overall, if I look at a journey of 15 plus year, our CAGR is around 15-16%, right? Now I move to the derivative portion, like I said, which is the engine. The power engine jo hai iska, AIF Cat 3 ka. Now these are the derivative returns calendar wise year. Now these are returns on margin. Okay, let me again give you a clarity here. These are returns on margin. Now this is the beauty. 2020, 100%, 17, 54%, right? You take 18, 20 and 22, right? Let's focus on these 3 figures. But before that, let's also look at the periods. Remember, I showed you 5 scenarios. In those 5 scenarios, we had a period wherein the market fell by 23% and 30% in COVID. That time, these are the returns of the derivative portfolio. These are pure derivative returns on margin. How does it play along? And, focus attention on this. What I am talking about, I'm actually showing you how it works. Now, 2025, 18 September, market were bullish. You can go and check your screen today. The index were positive, breakouts, and there was nothing what is going to happen next few days. These are our quant long position. You see, most of the M2Ms are profit. These are the stock futures, quant strategies. But we have some quant short built up and all are in losses. And that is where I said design comes into picture. That experience of 20 years has told us, even when the markets are trending, you should have some weak stocks or this thing which are contra. So we always make sure around some percentage of our positions are contra to the trend even in quant strategies. So we don't know how the markets will span. Now look at 26 September, 6-7 days, markets corrected by 3 to 4%. Now out of all these 6 which are in negative, all are here. And they are all positive. Apart from that, one more stock future got added in the Sonacom. So here I did not know how the markets are going to behave. It's a strong design element which made me have some short positions. 26 September, all my these profit booking quant got exited and new more buys were created on 26th of September. Again, we are at the bottom of that particular 15 days period. But by design, we created some long positions. I don't know again how the market will span out. And these are all the futures. Now let me show you the other part. Remember hedging and range bound market. Now again, 18 September, we are hedged using options, using put options and my range bound market strategies. One thing to say, all these range bound market strategies are created at different time frames, right? Some are created on 16th, 12th, 9th, 18th, right? Continuously they are created. Similarly, on 26th of September, my hedging continues, where a pair of buy and sell is there. My range bound market strategies continues. So now ecosystem is such that you have a product which takes care of the underlying long only. Now, underlying long only I'm not talking about. I think George covered enough in the previous presentation. Many presentations will cover. That has been the core. But over and above core, there is something core plus which sits, and I'm talking about that core plus here. Now, what is the advantage of all this? Now, if I really look at the statistics in terms of, last 62 days, 27 days of negative returns, Of those 27 days, 23 days you were able to protect. Now, the periods, one of the period I represented was 18th September to 30th September, where opportunity fund corrected by 0.92% compared to Nifty. And, August again period. Now, it's, like I said, next decade, we always say money makes money. The richer will get richer, right? But I feel today, people who are prepared for the processes, people who have the robust system, the robust designs, they are gonna make money. Traditional approaches needs to be complemented with something. And which brings again to the next part about Bonanza. Like I said, we are a 30-year-old group. We have been doing trading. We have been doing investments. Like I said, PMS we are doing for more than 21 plus years. Derivative part we have been using as a proprietary and, for our certain set of clients for more than, I would say 25 plus year, and CAGR has been 25% plus. The only difference is the returns I showcase your margin again in AIF, its exposure. And what we say, when you bring that expertise together, you are able to create 3 to 4% alpha. See, again, understand, I'm nowhere saying you will create huge returns. No, I'm saying when the markets will give you probably 18-20% returns, we will be able to create 3 to 4% alpha. Positive is when the markets are crashing, going down by 20-30%, this product will be a rock solid product. It will not probably have a drawdown of more than 10 to 15%. That's our back testing has shown, and the live result that we have shown you, right? So that is the beauty of this thing. When the mind is disturbed, right? That's where this product kicks in. The brains behind them, the founder, director, I mean, these are the core people. Definitely, we have an investment team, research team, which is backed by that. Mr. Achin Goel, again, he's a PhD from NUS Singapore, based out of Delhi, who heads our algo system. Mr. Puneet Kindra, he's again our fund manager for AIF, head quant and system trading. He has been with us for more than 17 years, right? Like I said, experience counts. So whatever I told you, pair strategies, IV, these are common things. You go to anyone, they will talk. How you do differentiate, right? Derivative में बहुत ज़्यादा play करने के लिए नहीं है आपके पास. But the processes, the methods that you have developed and created is what differentiate product to product, right? And on that note, I think, yes, I mean, and fortunately we have Mr. Puneet Kindra with us. He's there at Bonanza stall. You can go interact with him. I'm also there to interact. Any one of you have any queries, please feel free. And we also say build to ride the waves. And our philosophy is clear: to bring calm in chaos, right? We are all talking about investments, stretch valuations. And one of the common myth I would like to talk about, that are AIFs risky? Are they illiquid? Look at the product, right? You have open-ended AIFs in which liquidity is not an issue. You have AIFs in which a lot of component can be into unlisted, where it can be an issue, right? When you talk about risky, how you use the derivative, that makes the product risky or less risky. So it's very important for us as an investor, as a distributor, as a manufacturer, to communicate properly and understand properly, right? And on that note, I think I would like to thank all of you for your patient hearing and hope to see you outside. Thank you. Thank you, everyone.
Thank you, sir. Thank you for this wonderful presentation. These are the words from a true fund manager when he loves his product so much. Thank you for that. To felicitate Mr. Achin Goel, I would like to call upon Amit Rahman, founder, director of PMS Bazaar.